Hi, I'm Lisa DeSisto. I'm the Chief Advertising Officer for the Boston Globe, and I'm the General Manager of Boston.com, and I have the pleasure of welcoming you all here tonight for a very engaging discussion. Funny story about this beautiful space. I'm showing my age a little bit, but the last time I was here, it was the Bay Tower room. I was a waitress, and I was serving chicken to President Ford. So that is a true story, So I don't know if there'll be any chicken later, but I can promise you a great conversation. So tonight we're going to be talking about the new rules of leading talent. It's the third in a series of discussions that the Globe has been arranging on acquiring and retaining a talented workforce in Massachusetts. So I must ask how many people have been to our Building a Better Commonwealth events before? So we have a lot of repeat visitors, so make the new folks feel welcome. I also have a couple of housekeeping notes. We're tweeting tonight. There'll be a live stream over the participants, so please keep it productive. But please tweet during the evening and use the hashtag BetterMA. We're also live streaming for the first time ever the event, so if you want to send a note to your friends and family at home, they can follow along, and you can get to it through the website boston.com/bettercommonwealth. Which one is it, Bob? Just better. Boston.com/better. Okay, great. So moving right along. I'd like to express my thanks to the presenting sponsor of our Retaining Talent series, and that's Suffolk Construction. And I'd like to acknowledge Kim Steinley, who's the Vice President of Marketing and Work Acquisition. And they have been such a supporter of helping us put this series together, because they also understand how important it is that we have the best workforce here in Massachusetts, and we give people many, many reasons to stay. I'd also like to thank the associate sponsors of tonight's event, John Hancock Financial, as well as our partnering organizations, TNGG, which stands for the Next Great Generation, and I invite you to check out their blogs. They're a new partner with us on Boston.com, so you can check out some of their writing at boston.com/TNGG, and also Boston World Partnerships. And if you have an opportunity in the networking time to meet with some of the folks from BWP, you'll see what they're doing to also help promote Massachusetts as a great destination for business. So let's see. So tonight's program, we're looking at how companies can transform their workplaces, and we're going to hear from leading organizations on the latest thinking, research, and practices that lead to effective management of talent. So we're going to start the night with 3 presentations. I'm calling them We Notes, not keynotes, because they're only going to be about 10 or 15 minutes, from experts in the field of talent management, from companies Interaction Associates, TruePoint, and Conscious Capitalism Institute. Then after our We Notes, we're going to have a brief Q&A with those 3 presenters. Then we're going to invite up David DiFilippo from BNY Mellon Asset Management, who's going to moderate the panel of distinguished leaders of business who are going to talk about some of their practices for cultivating talent at their organizations. So it's my pleasure now to introduce our first presenter, Andy Atkins, who's the head of R&D at Interaction Associates, and he's going to kick off our first We Note with some perspectives on building trust and implications for leaders and organizations. So I welcome Andy. Here he is. Thank you.
Thank you. Okay, good evening. How are you all? Ready to talk about talent? Okay. I'm here to share a little bit of research with you that Interaction Associates has been conducting over the course of the last 3 years. And the research has looked at the intersection of leadership, collaboration, and trust. So think about that combination for a second: leadership, collaboration, and trust. And this research was near and dear to our hearts in Interaction Associates because, just to give you a touch of background on us, we help organizations create collaborative cultures and build leadership capabilities that drive involvement for business results. So that intersection of leadership and collaboration, right in our sweet spot. But you might wonder about the trust part. So I have a question for you. How would you celebrate your 40th anniversary? Well, for a lot of organizations, you might throw a big party. At Interaction Associates, we decided to take a little bit of a different route. So what we did was we set about with a research study instead. That's what we treated ourselves to for our 40th anniversary. Because over the past 4 decades, we had spent a lot of time doing research around collaborative problem solving and leadership skills. But we wanted to understand what was happening in trust, because it occurred to us that something in about the 2008-2009 timeframe, something was going on. So here's what we started to see. First of all, there were a whole lot of disaffected and disengaged employees. And the cost of disaffected employees and disengaged employees is really significant. In fact, in a study in 2007 by Hewitt and Associates, they found that disengaged employees were 5 times more likely to be looking for a job than engaged employees. So there's a real cost there to businesses, not just in terms of the productivity, which is major, but also the cost of turnover. So clearly the connection between employees and their workplaces was starting to erode. On top of that, the trust people had in companies themselves, that was also starting to erode. Think about the 2000s, Enron. You have a company that makes the most innovative company list 6 years in a row in Fortune, Enron. Unfortunately, they may have been a little bit too innovative in their accounting practices. But on top of that, not just at the company level, the trust in financial security starts to erode. In March 2009, the stock exchange had dropped, sorry, this is a bad flashback for you all, over 50%. So the trust that people had placed in the markets around their retirements was also at risk. And finally, we have the debacle of the Madoff Ponzi schemes. And the thing about the Ponzi schemes with Madoff that really gets my goat is that the whole dynamic of that was built on social currency of trust. It was all person-to-person recommendations. So you think about it, at the individual level, the company level, the organization level, even the social level, trust was starting to break down. So we wondered what was happening around all of that. So we took a look at it. And it was interesting what we found. In our study, we talked to and got input from over 150 different companies. These were companies across all different industries: healthcare, financial services, manufacturing, biotech, pharma, wide variety of industries. And some fairly major companies. On average, the companies that we surveyed had 11,000 employees and $14 billion in revenue. Some significant players. And what we found was really interesting because regardless of the type of strategy they were pursuing, trust kept coming up, as did leadership issues. So here's what we found. In some cases, the companies were pursuing strategies around innovation. And the key things that started showing up there was it a safe environment to experiment? Was it a safe environment for people to take risks? Did their leaders seem to learn and demonstrate that learning on the job was good? On top of that, was there an environment that actually encouraged risk-taking? We also had companies that were operating with a bias toward customer and employee retention. And there, the issues that came up were, what was the kind of fair and consistent leadership that you were getting? Was there the opportunity for shared responsibility for the success that people were achieving? And most importantly, did employees have an opportunity to provide input on decisions that were going to affect them? And then there were businesses that looked at operational efficiency, drive low cost. In those organizations, it turned out that one of the key factors was, did you have an environment where people could trust that it was safe to raise issues early so that you could avoid costs in the long run? And also, where you knew that people had clear, consistent direction, and leaders had the skills to provide that kind of a collaborative environment to drive accountability and shared responsibility for results. So we saw these kinds of patterns in businesses across 150 different companies. And among the companies that we looked at, we had some companies that were really strong in leadership, some that were really strong in collaboration, some that were really strong in trust. But a few of the companies, what we considered high-performance companies, were triple threats. They were strong across all three. And it turned out that they shared some very interesting characteristics. First characteristic was they weren't top-down. These didn't tend to be command and control companies. Now, I saw some research recently that really surprised me. I don't know if it'll surprise you, but we think of command and control as being fairly prevalent. I'm just curious, here in the room, how many of you think of yourselves as working in a company that's fairly top-down, command and control? Quick show of hands. Okay, just a smattering. Recent survey where they looked at over 1,000 companies showed that 43% of companies were considered coercively top-down. An additional 54, you had compliance, but it was still top-down. But there was kind of a balance or a mix of carrots and sticks. Only 3% of companies really were working an involvement strategy of bringing people in at the grassroots to help solve problems, and of orienting themselves around shared purpose. So top-down was a key issue. We also found that having that strong sense of shared purpose was a key issue. If people had a sense of what's the larger game we're trying to play and how are we all contributing to that, that made a big difference in those companies. And that was part of the formula for success of most of these high performers. And so employees could actively collaborate. They could actively work together in pursuit of that shared purpose. What we also found was compelling about these is that the environments that they created were ones of cooperation and tolerance. These were very open environments. They were safe environments for people to raise issues early. A couple of other things that they shared. They also shared a leadership philosophy that was based on coaching their people in terms of developing them, as opposed to just driving compliance and management. And they practiced open decision-making. People were actively involved in decisions that affected their lives. Sounds like a pretty good deal, right? You'd expect that a company like that would do pretty well. And in fact, we found that companies like that didn't just do very well, they did extraordinarily well. But let's talk about the dynamic of trust for a second before I tell you how well these companies did. When we did our research, we looked at 3 different sources of trust. And we referred to them as test, talent, and target. So let me describe each one, and I want a quick show of hands to see how many of you think of trust in the same way. So one of the bases for trusting someone is that you have a past experience with them. So your experience, they've passed the test. And on that basis, you say, okay, I know how they behaved in the past, so I can trust them to do what I want them to do in the future. For how many of you is that the case? That's one of the bases on which you would trust. Quick show of hands. Okay, we got a whole bunch of people here, probably about half the group. Well, in our survey, that turned out to be 71% of our survey. People said that was the basis of trust. But we didn't say you could only choose one of these 3. They could choose more than one. So the second one is talent. Sometimes people trust others because they believe that the person has the skills, they've got the talent to do what you're going to trust them to do. And so you trust them on the basis of the knowledge that you have around their talent. For how many of you is that the case? Quickly. You trust somebody because you know that they've got the skills, the training to do what you're asking them to do. Okay, great. In our survey, that was about 50% of our respondents said that was it. Finally, we had target. And target is the idea that you trust someone because you both share the same goal. You have a shared purpose. And on the basis of that shared purpose, you're going to trust them. So let's see what we get there. Okay, about the same we had before. In our survey, that was about 60%. Here's the kicker. In an organization, those organizations that were high trust organizations, target outstripped the other ones far and wide. In fact, in high trust organizations, target represented 93% of the reason that people trusted. 93%. That sense of shared purpose. So that was a really distinguishing characteristic. Now, I said before that these high-performing companies, they saw the fruits of their labor. Let me give you a sense of how much they saw them. We took a look at the performance, the financial performance within our data set. We had 150 companies, and we looked at the top 10% and compared that to the bottom 10%. So the top 15 companies against the bottom 15. We did a simple portfolio. Here's the quick comparison. On the basis of earnings, if you had a portfolio of the bottom 10% of the companies we surveyed, over the last year before we did the survey, you would have lost 21 cents on that, per share on the portfolio. However, if you had a portfolio of the top companies, you would have gained $2.72. Okay? Really big difference in terms of the earnings. And price-earnings ratio, there was a 28.5% difference in the price-earnings ratio, bottom to top. So there were financial rewards that were accruing to these companies on the basis of the way that they were managed as well. So, having looked at that kind of recipe for success, I want to take you back to the beginning of the survey. Because I said we've studied this for 3 years. These results are all part of 2009. And our 2009 survey was very early in the year when people could remember back to the good old days of 2008. You guys remember what happened at the end of 2008 and the beginning of 2009? The economy fell off a cliff. There's Wile E. Coyote falling off the cliff as well, just like our economy did. Now here's the question for you. We did the same survey again in 2010 and in 2011. Quick show of hands here. How many of you would have expected that ratings for leadership would drop from our first survey, which was looking back before the crash, to the second survey? Expect the scores on leadership would crash. Okay, most of you. How many of you expect the scores on collaboration would crash? How about on trust? How about all three? Okay, those of you who said all three, you got it right. These are the overall average scores on collaboration, leadership, and trust in 2009 down to 2010 and 2011. And it really did fall off a cliff. We saw an interesting story. So let me tell you what happened here, because if you listen to what happened here, there's a chance for what's the road to go back to better performance. So here's the story from 2009 to 2010. What happened here is that things crashed, and what happened to leaders is they stopped giving that sense of shared purpose. They started getting really, really tactical in the direction that they gave. And if you had formal processes in place, those persisted. But the informal processes that were kind of the undergirding the social fabric, those, they fell apart. So the informal ways that people interacted with each other fell apart so badly that what we found in terms of communication is that employees were talking to their leaders because they were trying to save their own skins, and they stopped talking to their colleagues. Okay? Now, what happened when we went from 2010 to 2011? You saw it kind of bottomed out there, but we did see some shifts. Because now what had happened is we're a year further on, a lot of the shakeout has occurred. Unemployment is still a huge issue, but for a lot of organizations, if you're going to fail, chances are you failed early. And so the feedback that we got was that the employees and the people who responded to the survey said, we think that our organization is stable, it's healthy, it's going to survive. We give our leaders kudos for having gotten us here. Glad that they did that. And they started to share more information with their peers again because they were the survivors, so they had to pull together. But on the other hand, collaboration, leadership, and trust all were still significant issues. And it happened for a couple of reasons. One of them was that because during this entire period of going through the transformation and the transition and the drop, leaders hadn't shared information. Remember, they'd gotten really tactical, they hadn't given the big picture? And that lack of transparency had undercut the trust that employees had in their leaders. And on top of that, although they gave their leaders credit for having gotten them through the initial bounds of the recession, they didn't have any confidence that their leaders had learned from their experience and that it was likely to be much better going forward. So that was kind of the high points on that. Now, let me just summarize a little bit of what we were finding then. So as we look at this, there are a lot of issues here around the leaders. And there's also an issue here around what do you do to create trusted relationships, and how do you take a collaborative approach? Because part of what we understand here is that part of the business of leaders, especially in tough times, is to create an environment where people can collaborate, where they can bring together the best of what they can do and have shared responsibility for the outcomes to drive those results. But to do that, they need trusted relationships. Now again, remember what the basis of trust was? That shared purpose? So what you end up with is a virtuous circle, where trusted relationships lead to increased collaboration, and increased collaboration leads to trusted relationships. And it's all driven off of leaders who keep that firmly in focus. So, we think about the work of leaders in 3 different domains. There's what they do to set strategy, to give people the big picture, to help people understand how they can plug in what it is that the organization's trying to achieve and how they can contribute to that. We also think that it's important that leaders are self-aware. And that's understanding not only how am I affected by others, but also how do others affect me? How do I affect others, but also how do others affect me? Understanding that dynamic is really key to the leader's success. And being collaborative. Being able to deal with issues of involvement. In fact, it's not just an engagement situation. We talk about trying to get engagement. We think it's beyond engagement. It's actually active involvement. What's the difference involvement makes? Study by John Cotter and James Heskett looked at over 200 companies, and they looked over an 11-year period, compared high involvement companies with low involvement companies. High involvement companies grew their revenues 4 times faster than low involvement companies. Makes a huge difference. So, 3 lessons learned, 1 in each area. From a strategic point of view, don't forget to share the big picture. Give people a context for what you're looking for them to do. And by giving that context, you create that shared purpose that we can see drives trust. From the point of view of your involvement, you need to be transparent with people, especially around decisions that are going to affect them. Help them understand how they're going to be involved, how they can provide input, and what the basis for your decision making is going to be. And finally, be humble. It's important that as leaders at all levels in organizations, we demonstrate that we know how to learn. Because if we show that we know how to learn and it's okay for our people to learn, we're going to be able to learn our way forward through this uncharted territory that we're in now. It's part of the key to success that we saw before, and it's going to be part of our success going forward. Now, 2 quick announcements. One is, unfortunately, I'm going to have to leave in just a couple of minutes because I have to get on a plane to Los Angeles. But I'd like to quickly introduce Linda Stewart, who's the president and CEO of Interaction Associates, and she's going to be part of the next discussion to answer questions about the research. I want to thank you all very much for your attention, and now it's a terrific pleasure for me to introduce Russ Eisenstadt. Russ is the president of TruePoint Partners, and he's also one of the authors of Higher Ambition, and he's going to tell you about the research that he and his co-authors did in looking at that work. Very quick story about Russ. I've known Russ for about a half a dozen years, and before that I knew him as a professor and a writer, and I was teaching at Babson in their MBA program in the business school, teaching a course in change leadership. And Russ and I were in a meeting one day, and I said to him, you know, Russ, this is the first time we've ever been in a meeting together, and I'm having a really strange experience because I'm going to teach one of your cases tonight. And true to form, and this really told me something about Russ, he said, really? Which one? And can I come? And I was more than a little intimidated, but he's just been a great partner all the way along. So please, a warm welcome for Russ Eisenstadt.
Good. All right.
Okay.
So I'm going to stand at the podium because I was in awe at Andy's ability to go back and forth and not bang into the thing and not fall off, and so I'm going to stay put. I think you're going to find a remarkable coming together in terms of what I'm going to be speaking about, what Andy spoke to, and what Raj is going to be talking to. And I have to say it's in some sense inspiring. I mean, I think, you read the news every day, and beyond the Red Sox, you go to the financial pages, and you look at what's going on in business, and it's not a pretty story. And yet, there really are other kinds of leaders out there. There are other kinds of companies that represent a very, very different way to manage, and I think something extraordinary. And I think that's part of what Andy was talking about when he talked about trust. It's part of what I'm going to be talking about when I talk about higher ambition, and I think you'll be hearing from Raj as well about a very different model of management. So what I want to talk about is a 4-year journey that I and my colleagues at TruePoint, Michael Beer, Nathaniel Foote, Fleming Norgren, and Tobias Freidberg have been engaged in around this topic that we call higher ambition. And in a lot of ways, it's very much picking up. We started in a place very similar to what Andy was talking about around this whole area of trust. I think for all of us who've worked with business leaders over the years and have seen the best of what business can be, we had a sense that business can be a force for good. That in fact, if you look at where people spend their lives and about the impact that business has, the positive impact of business can be extraordinary. And yet there's this extraordinary disconnect between that experience and the reality of what we were reading about, and frankly, the examples that we're reading about in the paper. And again, back to this awful issue of trust. The figures that we saw, only 40% of the public trusted senior executives. Employees not trusting their own senior leaders. And we said, look, that's there, but somehow we have to believe that there are leaders out there who embody a very different way of managing. And so those are the leaders that we went out to find in this research. And the leaders we were looking for were leaders who were not just succeeding economically, but people and companies that were committed to making a larger contribution. To find them, we looked at the hard numbers. They had to be leaders in their industry from an economic perspective, but equally important, they needed to be companies that were truly having a positive impact on the world. And there was a third, in some sense, more intangible criteria. They had to be leaders that, on some level, we respected. Okay, so it wasn't just about the PR. These were leaders that were genuinely trying to make a positive difference in the world. We found these leaders not just in the US, but in Europe. We also went to India, and we interviewed a number of leaders there as well. And we found a remarkable congruence in the same kinds of issues, the same themes, the same beliefs, the same patterns of practice among those leaders. And that's what I want to talk to you about today. The most significant thing that these leaders shared was was really a higher ambition. And Peter Sands, who we're going to be talking about some more in a few minutes, who's the CEO of Standard Chartered Bank, I thought put it very well when he described what we mean by higher ambition. He said, fundamentally, what drives me is to shape the organization simultaneously to being very effective in terms of performance. These were extremely performance-oriented leaders. They wanted to win. A great place to work, and something that is actually a force for good. Different leaders talked about it in different ways. So Ed Ludwig, who's the CEO of Becton Dickinson, talked about, he'd read Jim Collins, and he talked about, back to good to great, he talked about 3 grades. Great performance, great place to work, a great contribution to society. Doug Conan at Campbell Soup talked about winning in the marketplace, winning in the workplace, and winning with all of the communities within which you do business. Again, different words, a common ambition. So what I want to do is to tell you the story of a couple of these higher ambition leaders. We'll talk about Peter Sands at Standard Chartered Bank and Doug Conan at Campbell's, so that we can better understand the lessons that I think we can learn from those leaders and from their actions. So let's start with Peter Sands at Standard Chartered. So Peter Sands is a very interesting character. He worked at McKinsey, rose up through the ranks, had just been named director at McKinsey, in a lot of ways was on top of the world, was very much a numbers guy, came to Standard Chartered, did a lot of classic strategy work, and Standard Chartered asked him to leave that and come and be the CFO of Standard Chartered Bank. How many people here have heard of Standard Chartered Bank? We've got 3 people. So they're a little bit better known in the UK and a lot better known now, but not so well known when Sands started working with them. And so, in fact, this is the interesting question about Standard Chartered. You see a banana peel here. And in fact, within the UK, when he went to work with them, they were known as the banana skin bank because they were always slipping up. Whenever they tried to do, they didn't execute on very well. They were an international bank, but really a distant number 3 behind Citibank and HSBC. And they were perennial takeover target, right? The real question was, were they going to be around at all? Because, frankly, they didn't seem to be very viable. So you have to ask, how would a guy like Peter Sands, right, who in a lot of ways had all the opportunity in the world as a director at McKinsey, why did he leave and go to work for Standard Chartered? And what he said to us is he said, I saw something there. I saw the potential in the people and in the culture and what was possible. And so what I want to talk to you about is how Peter Sands, and it wasn't just Peter Sands, it was a whole team at Standard Chartered, how did they turn around that bank? And what does it say about higher ambition? And what does it say about what leadership is required in the kind of economy and world that we're in? So the first thing that Sands did with his team was to stabilize the business. And we're going to talk a lot about values, and we're going to talk a lot about purpose, but one of the commonalities about higher ambition leaders is they are really good, tough businessmen. And one of the consistent themes that you see in the research is getting the fundamentals right. These tend not to be leaders who want to be in the press. They tend to be leaders who want to get down into the guts of the organization and make things, first of all, things have to work before you do anything else. So there was a big piece of what he did at Standard Chartered, which was about simply confronting reality. This was a polite bank, people were good to each other, but they were living in a bubble relative to the reality of the world they were in. He talked about turning over every rock, absolutely understanding the business from top to bottom in terms of the economics. So a lot of that's just classic business. Gets a lot more interesting. The next thing he did was he worked with the team to craft the strategy, but a very different kind of a strategy and a different way of thinking about strategy than you might think of somebody who had a classic strategy background from a good consulting firm. It was a strategy that was built not just on looking at the external environment and analytics, it also was rooted in the culture and the capabilities and the values and the purpose of Standard Chartered Bank. And what he found as he was turning over every rock within Standard Chartered was that they had been doing business in a lot of geographies, a lot of out-of-the-way places in Africa, in Asia, in the Middle East, and they were good people. And they were people who cared about doing a good job. They were people who cared about, in fact, the relationships that they had built. And there was a deep and a strong sense of ethics. And what he said is, we are going to focus on those relationships. We are going to focus on genuinely being there for our customers in the places where we do business. And he crystallized that in a term, here for good. Interesting as a strategy for a bank. Here for good in both senses of the word. Here for good in the sense that they were not going to be, if you think about the reputation of multinationals in the developing world, it's not necessarily a good one. He said, we are going to be with you through thick and thin, through revolution, through everything else. We are here for good. And also here for good in the sense that we are going to be a positive force within the places where we do business. We are genuinely going to be making a contribution. They talked about what they call a trusted insider strategy, which meant that they were there in the country in a way that they could be trusted. That wasn't just about the business. They said, you know, this is about more than a business. One of the things that struck people is when you do business in the developing world is there are an awful lot of people who are suffering. And they looked at how could they make a positive difference. And they looked at the area of preventable blindness. And they said, you know, we're a pretty fragmented bank. We do business in a variety of ways, in a variety of different countries. We're going to bring the whole bank together around this area of preventable blindness. And so they came up with this idea of seeing is believing. And so for the last 6 years, they've been driving to fundamentally eradicate preventable blindness in the developing world. At this point, they've saved the sight of 2.5 million people. They've brought that sight back. And they've prevented blindness in another 7.5 million people. So there was a piece, again, about creating a broad community in the bank around a shared purpose. And it gets back to what Andy was saying before about the power of shared purpose. Some other parts of it were a lot more fun. Folks who are fans of American Idol, they created what they call the Dance Idol competition, where each of the many groups within Standard Charter, or the various countries where they did business, had their own dance competition. And it was a way of bringing people together and celebrating the diversity within the bank. And finally, talent, attracting and unleashing talent. And the topic of what brings a lot of you all here today. They created something that they call Project Istanbul, So Project Istanbul was about, quote, bringing in young Turks, okay? So this was about taking people from all different areas outside of banking and saying, we want people who are going to help shake this up. They broke down the silos. They took the head of organizational learning and they put them in a they made them the head of the Chinese business. Again, talented people. They were going to transform this bank through people. And in doing that, getting the fundamentals right and the other pieces, they really made extraordinary progress. And by 2008, they turned the bank around. And then with the financial crisis, they had a real interesting opportunity. They were one of the few banks that remained open for lending at that point. And what most banks would have done is to essentially say, that's great, let's go out, let's expand share, find new clients. Standard Charter did something very different. They focused their lending on their existing clients. They said, we're here for good. We're going to stay in the geographies we're in, because they believe that clients have long memories. How you work with them in a crisis is what people remember. So there's that sense of, again, staying the course and integrity. And you can see, again, the kind of financial returns as well as the impact on the world. I want to go a little bit closer to home and talk about another example, Doug Conant at Campbell's Soup, putting the chicken back in chicken soup at Campbell's. So when Conant came into Campbell's Soup in 2000, they were in what he called the circle of doom. Campbell's had been the best performing food company in the early 1990s through the 1990s. We all know about Campbell's Soup. They had dominant market share. They were incredibly profitable. The problem was, where did they go from there? They had shareholders and they wanted to keep growing profits. They couldn't figure out how to grow the market. So what they did is to preserve profits, they raised prices. As they raised prices, volume went down. They had even more difficulty getting profits to keep going up. What did they do? They cut investments. They started to cut people. And they reduced product costs. In fact, as I said, they took the chicken out of the chicken soup. And so you had a situation where Conant comes in and you have a great company, really an iconic company, that was on the ropes. So how did he turn it around? The first thing he did is he started by telling the truth. It's one of the things that Andy talked about. He rebuilt trust and credibility with investors. He said, we didn't get into this situation overnight. We're not going to be out of it overnight. We're going to set expectations in a reasonable place. With employees, he said, we don't expect you to follow our agenda until we take you seriously and we worry about your issues as well. The employees are as important as anyone else. He created two metrics, two fundamental metrics at Campbell's. One was total return to shareholders, but the other was employee engagement scores on the Gallup survey. Both of those was absolutely critical. No complicated balanced scorecard, employees matter, the shareholders matter. And finally, customers. He said we're going to put the chicken back in the chicken soup. The product matters, quality matters, and let's get the fundamentals right. The second thing he did is he stayed the course. He built capabilities one quarter at a time, continuous improvement, year after year after year. And finally, he served as a chief talent officer for Campbell's. He went out, he single-handedly used his network of relationships to recruit people from all over the industry. He ran the talent program. He was teacher-in-chief at Campbell's in terms of training high potentials, and the results were extraordinary in terms of shareholder returns, twice his peers, 5 times the Standard & Poor's 500. His employee engagement scores went from absolutely some of the worst Gallup they'd ever seen to the best they'd ever seen, one of the 100 best corporate citizens. So what I want to say to you is that if you think about the situation at Campbell's and you think about both of these stories, I think what they highlight is that we have a choice as leaders in terms of how we compete, how do we survive and win in a hyper-competitive global marketplace. There's one path, and it's what I would call the race to the top or the race to the bottom. If you think about what Campbell's did before Conan came in, it's what I would call the race to the bottom. Making the short-term numbers, even if it involves cutting investment in people, products, and capability. Very much a sense, look, we have no choice, we've got to do what we need to do to survive. But there's another model, and that's the model of higher ambition leadership, which is around delivering distinctive value to customers, employees, and communities by developing and unleashing the power of your people and your organization. So there's an opportunity here around a different way to manage, a different way to lead, which higher ambition leaders, I believe, embody. And what I want to say, though, is to do this is not easy. And I want to just quickly highlight a few of the things that higher ambition leaders do in order to be able to win the race to the top, what we call the 5 core disciplines. And you'll see each of those really takes what normal business leaders do and takes it up to a whole different level. In terms of strategy, if you think about what Peter Sands did at Standard Charter, it wasn't just a strategy that was about the numbers. It was about rooting your strategy in mission and values and capability, here for good. And this is something I think Raj will be speaking about in a few minutes, about the power of a mission-rooted strategy. In terms of performance management, if you have a strategy and if what your business is about is more than just the numbers, there's a moral dimension about performance. This isn't just about quarterly reviews. One of the things that Conan talked about is that this is about keeping your promises, earning the right to lead, building a shared commitment to excel. Organizational design, this is not about boxes and lines and reporting relationships. Think about Standard Chartered. It's about bringing people together across the firm in genuine trust-based relationships around something that matters, a shared purpose. If you think about human resource development, what's striking about these leaders is they don't delegate the people issues to HR. They have great HR functions, but in every one of these cases, the leader is the absolute chief talent officer, the chief teacher. They are the person, they are winning through capabilities and through people. And finally, it says something about the kind of personal leadership that you need. There's a wonderful, wonderful Finnish word that we discovered in the course of this work called sisu. What sisu means, this is our Scandinavian colleagues explained to us, is sisu is when you have to cross-country ski 25 miles through a blizzard And you need to get to that house, that warm hearth at the very end of the path. That's what these leaders have to do. It is not easy. This is not something that happens overnight. So there's a quality of perseverance and endurance that truly, at Sisu, which is very much at the heart of higher ambition leadership. And so what I want to leave you with is an invitation to higher ambition leadership, a sense that there really is a different way to lead and manage and to win in the kind of economy that we're in. That a way of managing that says there is a purpose beyond making money to being in business. A conviction that ends don't justify the means, that these are leaders, it's how you manage as well as what you achieve. And a belief in the extraordinary potential of the human side of the enterprise. And so this is the work we've been doing. It's work that's not ended for us. We are continuing to do this work at TruePoint. And there are a set of questions we're continuing to ask, and I hope you continue to ask as you think about what we've talked about today. How can we make business a more consistent force for good? How can we help new generations lead in a better way? Because this is an ongoing issue. And how can each of us more effectively lead with a higher ambition? So I want to now introduce Raj, who I think is very much going to pick up on a lot of the issues that we've talked about. Raj is the founder of the Conscious Capitalism Institute and the co-author of Firms of Endearment. And he's going to be speaking to you about a topic that's very much connected to what you've just heard, tapping higher purpose, the power of conscious capitalism. I want you to welcome Raj to the stage. Thank you.
Thank you. So I'm going to actually, oops. Wow. Okay. Thank you. I think somebody really was thinking clearly when they put these topics together, because there is a lot of consistency here. So Dimitra, I think I want to thank you for that. What I'm going to talk to you about today is a related idea, something that we are calling conscious capitalism. I'll explain what that means, but higher purpose is very much at the core of that. But I want to start by first talking about the power of capitalism per se. You know, we're going through one of those phases where there's a tremendous amount of criticism and lack of trust and other things that are going on in the world of business, or are in the world around the topic of business. But the fact is that capitalism has done a tremendous amount for us. If you look around and look at our lives and look at all the conveniences we enjoy and the quality of life and the standard of living and all the rest of it, really, these are things that have been enabled through the forces that are unleashed through capitalism, you know, tapping into the creative genius of people, organizing people towards shared purpose. So there's a lot that has occurred. And one of the myths out there is about what capitalism has done. So again, how many of you believe that capitalism has created more wealth or more poverty on the planet? How many think it's more wealth? And how many think it's more poverty? Clearly, you know, there are views on both sides of that. Now, if you look at the data, it's interesting. I think it's fair to say that capitalism actually is the force that is ending poverty on our planet. If you go back to the year 1820, 85% of the world's people lived on less than $1 a day. That's in today's terms. 85% of the people on the planet lived on less than $1 a day. Most people lived in abject poverty. That number is actually below 20%. I just saw it's about 17% today. Still a long way to go. There's still too many people living in unacceptable conditions. But the fact is, we have made tremendous progress. And we have made more progress in the last 2 centuries than we did in the last 10,000 years before that, in terms of elevating human living standards as well as life expectancies. And I think it's fair to say that if capitalism is allowed to operate, and if it operates with a degree of higher consciousness about its power and its potential, that we could and will end poverty on this planet in this century. And we can do so without decimating the environment and having other negative consequences. That's really the power and the promise of capitalism, and that's what we are very passionate about. But as I mentioned, we are living through an age right now where there's a tremendous amount of cynicism about business, about big business in particular. Gallup does a survey of institutions, trust in institutions. I think big business came out below Congress last year. At 16% of Americans trusting big business, 17% trusted Congress. I think Congress has now reclaimed its rightful place, but the fact that big businesses are so mistrusted says something has gone wrong in that social contract between business and society. By the way, small businesses are trusted by 65%, and the military is the highest, trusted by 85%, but only 16% trusting big business. I think there's a problem there. Tom Friedman put it very well, as he often does. He has a way of capturing what's going on in our world. He said that the whole growth model that we've created over the last 50 years is not sustainable economically or ecologically, and that Mother Nature and Father Greed have hit the wall at the same time. I think we all know about Mother Nature. I had not heard about Father Greed. But our systems, the way we do things, the way we produce products, the way we consume, we need to rethink a lot of that. Doesn't mean we stop doing that, but we need to rethink the way that we do it and how it come about. Now the question is, why is there this big divergence between where people are and where businesses are? And why is that gap growing over time? I think to us the explanation is pretty clear that we as human beings are on a journey of continuous evolution. We did not stop evolving when we got up on our hind legs. That journey has continued, but the evolution has gone more inward. And it appears that most businesses have not really adjusted to that new reality. And if you look at how have we changed, what are some of the ways in which we're changing, I think it's really useful to step back and say, wow, a lot has changed in a short amount of time. So let me just very quickly run through some of those. Aging. Is anybody here who's not aging? Going the other? But what we mean by aging really is on a societal level, the rise of the median age of a society is really the norm now in most countries around the world. Birth rates have fallen dramatically, life expectancies have increased. So most countries around the world, the median age is rising. In many countries, it's in the high 40s. In some countries, it is in the early 50s now, like Japan. And what that says is that the value system of society shifts dramatically when most people are in midlife and beyond. It is much more about purpose and meaning, and some of those higher level values when you look at Maslow's scale. So that's a significant shift that has been underway and is underway around the world. Another one that surprised me a little bit was that our intelligence levels are increasing at the rate of about 4% every decade, as measured by IQ tests. And this is called the Flynn effect, after the person who discovered this. And this has been going on for several decades, about 5 or 6 decades. So if you do the cumulative impact of a 4% increase in IQ over 6 decades, it says that the average person today is 30 to 40% more intelligent, as measured again by IQ tests, than we were 50, 60 years ago. Now that's a significant change. It says that people today are capable of understanding more complexity than we ever have before. Right? So people are essentially smarter. And we are more educated. The access to education is much higher on a global basis, and the impact is especially dramatic for women. So a century ago, maybe 10% of Americans went to college, out of them maybe 20% were women. Today, about 45% go to college, out of whom 60% are women at the undergraduate level and 70% at the master's level. The change in the role of women in the world is dramatic. 100 years ago, no woman on this planet had the right to vote. Think about that. 40 years ago in Switzerland, women could not vote. Last November, they swore in their first female majority government. That's the rate of change that we're going through in society. So we're better educated, we're better informed. The invention of the World Wide Web 20 years ago, think about it, Google is only about 10 or 12 years old. But think about the impact that the web has had, that anybody, any place has access to any information about anything that's going on anywhere for free. The average person today has access to more information than the richest person in the world did 20 years ago. Right? And not only do we know things, we can also act upon them because we're also connected. 4.5 billion people have cell phones, 700 million are on Facebook alone. We can act on things in a way that we never could before. We can connect with others with similar concerns and similar interests. And most significantly, we are on this journey in consciousness. What does that mean? There are things that we tolerated, that we accepted, that we lived with in the past that we don't anymore. And this journey is continuing. 150 years ago, we had slavery. 100 years ago, women could not vote. We had apartheid. We had segregated societies. We did not have gay rights. We had children working in factories. We had all kinds of things that now we recognize as wrong, and we cannot imagine going back in those areas. But that journey is a continuous one. Our level of consciousness continues to rise. And within all of that, there's a lot of great news, because as a species, we are evolving. If you look at the rate of violence, it feels like there's a lot, but actually there's been a dramatic decline in the percentage of people that suffer violent deaths, either through wars or through crime. It has gone down hugely. So these are all markers of human progress and rise of human consciousness. Now, we think that the corporate world and businesses in general will have to align with this in a much more conscious way in order to be successful in the future. The old way of doing business and thinking about what the purpose and role of business is will not work. So what does it mean to be conscious? It means to be mindful, to be awake, to see reality as it really is, not as you wish it to be. And a quote from Fred Kaufman, a conscious business fosters peace and happiness in the community, mission, respect and solidarity in the community, peace and happiness in the individual, and mission accomplishment in the organization. This is what we are trying to achieve simultaneously. These are not trade-offs. These are things that can and must occur together. And I think we're starting to move towards the recognition now that we're all connected, that we're all interdependent. This cartoon, I think, kind of says that, right? We had this old notion of complacency where many people in the world are sort of sitting high and dry while the majority of people out there are struggling just to make ends meet. But the fact is, there is no there. Everything is connected, right? We are all part of the same fabric of life on this planet. So we have to start recognizing that and acting accordingly. So in our research, a book that came out a few years ago, we looked at companies that were really built on a foundation of love and not fear. I think if I had to define the core element of these businesses, too many businesses run on fear and stress. I think we talked about command and control, right? I mean, that's just sort of a benign version of that. Most business, there's a real statistic that says the heart attacks are highest on Monday morning. Did you know this? Heart attacks are highest on Monday morning. That's why we have a restaurant chain called Thank God It's Friday. Right? It's like, oh, cannot wait until Friday, but then Saturday, Sunday, Monday comes around, and again people are back to normal. It doesn't have to be that way. Can you build a business on love, on caring? Can you have work that really makes a difference in people's lives? It is true, and it is possible, and it is true that many companies are, in fact, doing this. Hence, the name of the book that we wrote a few years ago, it's called Firms of Endearment, How World-Class Companies Profit from Passion and Purpose. And these are the 18 publicly traded companies that we looked at. We also had 10 private companies. Many of them from this area, by the way. Jordan's Furniture, New Balance, two of the private companies from this area. LL Bean, another private company from the Northeast. But these were the public companies. And we selected these companies on the basis of their adherence to some of these tenets that we talk about. The notion of higher purpose, the fact that they treat all of their stakeholders as important, and that all of the stakeholders actually not only like them and trust them, but actually have an emotional bond with these companies. And then we looked at their financial performance after the fact. So we picked them for these other reasons, but then we looked at their financial performance afterwards, expecting that perhaps their returns might be average because they pay their people much better. Their suppliers are profitable. They invest in community. They invest in the environment. They pay taxes at an average rate of 34% in our research. So we said, well, maybe there's not that much left over for shareholders, but if you look at the total value created for society, it's much more. And what we found, in fact, was that in a 15-year period, the book did a 10-year analysis, we just updated that to the last 5 years. So over those 15 years, the market was only up 157%, but these companies were up 1,646% collectively as a portfolio. So it's a 10.5 to 1 outperformance. Dramatically outperforming the good to great set of companies as well, which were selected only for financial performance and included Philip Morris as a great company. These are companies that are actually having multiple positive impacts on the world. So these companies all meet the 4 tenets of conscious capitalism, which I mentioned: higher purpose, stakeholder orientation, so that society, partners, investors, customers, employees are all seen as ends, not just as means. So think about the tremendous waste of human potential. By the way, the companies that we look at, Southwest Airlines, 97% of employees are highly committed, passionately engaged. With beyond just core engagement, they are passionately committed to what they're doing. Imagine the difference in effectiveness between somebody who's just engaged, 29% engaged, versus 97% passionate commitment. It makes all the difference in the world. And at the same time that that's going down, uncompensated effort is going up. People are joining and starting nonprofits at a rate we've never seen before. Why? Because that is fulfilling a spiritual hunger that people have for meaning and purpose. Work is not giving it to them, therefore they're finding it elsewhere. The fact is that if you have a business that's based on purpose maximization, then that will tap into those deeper sources of human energy and inspiration and creativity. Human beings are not a resource. Human beings are a source. And we're a source of tremendous energy and creativity and inspiration. We are capable of extraordinary things in the right circumstances. Most businesses have not created those circumstances, hence we don't really get even a fraction of what people are capable of. So power is purpose, the power of purpose, the difference we're trying to make in the world. It drives everything that we do. It matters not only to our customers, but to our employees and to communities and society at large. It is our reason for being that goes beyond making money, and yet, as we have found and others have found, it typically results in making far more money than we ever thought possible. So Southwest Airlines is a good example. Whole Foods, another great example. Higher purpose is to educate people that what you put into your body will make a difference to your health and the health of the food system and the health of the planet. Google, another company with great purpose, organize the world's information and make it easily accessible and usable. Tremendous opportunities for growth, and they've done that. By the way, all for free. Right? REI, Recreational Equipment Incorporated, the CEO spoke at one of our conferences, and she had tears in her eyes when she said, you know that our kids are spending 52 hours a week in front of a screen and only 30 minutes in unstructured time in nature? 52 hours versus 30 minutes. She said, what are we doing to ourselves? We're part of nature, and yet we are losing touch. So our purpose is to reconnect people with nature. By the way, we don't care if you do all the research at REI and then go buy it online from LL Bean. It's okay. That's okay, because they're helping us serve our purpose. They are fellow travelers on that journey. There's a very different perspective on competitors when you start to think in terms of purpose. So what we have found, again, I'm giving you a very brief, in a nutshell here, conscious capitalism really seems to work in multiple ways. It works in financial terms, but also, more importantly, I think works on those other dimensions as well. Financial, wealth, but also social, cultural, spiritual, ecological, and physical well-being. All of those elements are served by this. It works in financial terms because these companies operate with lower gross margins, but they end up with higher net margins. Think about that. Lower gross margins because they pay their people well, they pay their suppliers well. They're not squeezing in those places. And those are the things that actually make a difference in the products and services that you produce. Right? The quality of the input and the people who are involved. So they don't squeeze there, but then they save dramatically when you look at the other elements of SG&A. Much greater employee retention. Turnover might be in the low single digits compared to industry turnover, which might be triple digits. Much greater engagement, passion, creativity, much lower marketing costs, dramatically lower, sometimes 90% lower marketing costs, product return costs, legal costs, administrative costs, management costs. These companies are self-organizing, self-managing, self-motivating. They don't need a lot of layers of management, people telling other people what to do. Right? You just don't have that. And therefore, you end up with higher net margins, even though you have lower gross margins. And they also have higher multiples. The PE ratio that was talked about earlier, we found that as well. So here's the opportunity we all have today, especially, I think, in the Boston area. This is, in many ways, I would say, the epicenter for these kinds of ways of thinking about business. We have some of the world's greatest thought leaders here, as well as many of the great practice leaders. So we really have an opportunity here to make this a showcase of these kinds of practices which are successful on multiple dimensions. The opportunity we have, those of us who are alive today, we have the opportunity to lead the most meaningful lives human beings have ever led. That's a big statement. I really think that it is true. Why is it true? Because our challenges are great. Yes, we have eradicated a lot of poverty, but the fact is 4 billion still live on less than $2 a day. So many people don't have access to basics around the planet. The challenges are tremendous. There have never been more human beings on this planet than there are today. Challenges are huge, but so is our consciousness of those challenges, and so is now our ability to do something about it. We have all of the tools that we need. We simply need to mobilize the greatest resource that is still lying unmobilized, which is human energy. The greatest source of renewable energy on this planet is human energy, and we simply haven't tapped into that. This is a metaphor we use, rising from a caterpillar becoming a butterfly. It's the same creature, same DNA. Certain genes get switched on at the right time. You're able to elevate to a higher life form. From one that simply consumes and eats, that's what a caterpillar does, to a creature of light and beauty, but that also cross-pollinates and creates value for the world. That's really what we as human beings can evolve to. That's what corporations can also evolve to. Thank you. I hope I didn't go over on time too much. Thank you.
We're going to go right to the panel. So good evening. Great, thank you. Good evening. I'm Dave DiFilippo. I have the privilege of being the Chief Learning Officer at the Bank of New York Mellon Asset Management, and I'm going to lead us through the next part of the evening. The only thing is I'm a little nervous right now after Bob's presentation that tomorrow I may be reposted to Asia Pacific. And if so, I would just ask that someone please call my wife. I'd appreciate that. We're going to talk in the next part with our panelists, and we're going to do this in two parts. We're going to have our panelists come up who are members of the Boston business community and answer some questions that we've prepared. And then for the second part of the panel, we're going to ask our presenters to come up, and we're going to have an open Q&A with the audience. So with that, if I could just ask our panelists to please come on stage and take a seat. Are you Karen? Are you Karen? Karen, nice to meet you. Jason, nice to meet you. So it's a pleasure to introduce our four panelists tonight. First, to my left, I'd like to introduce Jason Robart. Jason is the Senior Vice President and Chief Human Resource Officer at Blue Cross Blue Shield of Massachusetts. And also to my left, I'd like to introduce Karen Kaplan, who's the President of Hill Holiday. To my right is Linda Stewart, Chief Executive Officer of Interaction Associates. And also to my right is Bob Nickerson, Chief Human Resources Officer of Constant Contact. So thank you for joining us tonight. We're going to start with some questions. The first question is for all of our panelists. And that question is, based on some of the polling that was done earlier in the evening, there are definitely some concerns about talent here in Massachusetts. And I'd be curious for all of your points of view, starting with Jason, with what are some of the priorities that you have from a talent perspective in your organizations?
It's interesting. As I was thinking about tonight, over the weekend, I picked up, I don't know if any of you have seen it, the October issue of Harvard Business Review. And it's the talent issue is the cover story. And the first lesson from in that article was the talent strategies really need to be aligned with corporate strategy. And that you really don't need to take best practices from all of the experts. So I'm not quite sure what we're going to share tonight that will be particularly helpful to the organization. But it really was focus your talent strategies within the context of your corporate strategy. At Blue Cross, as we think about talent and the need for talent, it really centers on ensuring that we have a workforce with the skills and experiences necessary to balance the focus of our focus on cost and affordability, our focus on access, and our focus on quality, while simultaneously being commercially viable in a very changing healthcare environment. We found that means we need a new type of talent, new set of skills from our associates as we go forward than perhaps what we've had in the past. We're not hearing. Sorry about that. How's that? Is that better? Yeah, we don't know. Okay. I don't want to take too much time from other panelists. My point simply was, as we think about the evolving healthcare marketplace and our focus on affordability, on access to healthcare, and on quality healthcare, while being commercially viable in this ever-changing hospital or healthcare environment, we need to really look for associates to develop a new set of skills, to come to us with a new set of experiences than those that we've relied on in the past.
Thank you, Jason. Karen?
So for us, talent is critically important because it's really our only competitive advantage. So what we make and sell are ideas, and it's really all we have to leverage, and so it's always top of mind. And even given sort of today's high unemployment rate, it is still very, very difficult for us to find truly great, outstanding talent. And I'm not talking about talent that is, twice as good as the average. I'm talking about talent that is 10 times as good as the average, and that's sort of the standard. For us, that's really the only way that we can get our work done today for clients, and the only way that we can make our leverage model work. And what's interesting is that since a lot of our work, since the internet and digital communications have driven a lot of changes in the work that we do, we look for different types of people. We need to have sort of a mix of specialists, sort of the more traditional talent, people we refer to as I-shaped, who can really go deep on their particular expertise. But today, we really need to have versatilists as well, or what we call T-shaped people, who have the ability not only to go deep in their area of expertise, but also have the curiosity and the skills to empathize with people to help to kind of connect the dots and get the best work, given how much more complicated our work is today. So we have kept our standards very, very high. We won't compromise our talent standards. We like to think that every new person we hire is an opportunity to make the company better. And I was just lucky enough to be at the Clinton Global Initiative last week and was lucky enough to hear Hillary Clinton speak, and she quoted her husband, President Bill Clinton, who says, and of course this is about much more important endeavors than advertising, I will admit, but that he often says, we don't have a person to waste. And that is very much what we feel about talent at Hill Holliday these days.
Great. Thank you, Karen. Linda.
Yeah, the top issue for us around talent, and I would say that this is also the top issue for a lot of our clients, is keeping the whole issue of talent on the radar screen in tough and challenging economic times. So I think a few of us were reading the Harvard Business Review talent issue this weekend. And they're very clear about the top performing companies in good times and in bad continue to make investments in their people. And that would be in hiring them, retaining them, and developing them. And those organizations that think of those investments as discretionary dollars really have a difficult time managing their talent effectively. So for our organization, it's really that. It's in difficult and challenging times, being able to keep that focus on talent and having it be as important as the rest of our business results.
Great. Thank you, Linda. Bob, your perspective, please.
Well, for us, I kind of boil it down to three things. One is, when we hire today, talent for today, we want to really be thinking about talent for tomorrow. Can they grow with us? Can they change with us? In a tech company, in a fast-growing company, we need to be able to scale and to grow. So it's not just about hiring for the skill set today, it's hiring for a longer term. The other is we really need to balance the skills with the culture, passion for the purpose of what we do in our business, which is helping small businesses and organizations be successful. So it is truly purpose-driven, and we need people who care about that, who understand it, who want to make it better, and really care for the end result of what their work is all about. And finally, we want to do a terrific job of onboarding our staff. It's not just about wining and dining and courting them to bring them on board. It's keeping them on board and sealing that deal with them and setting them up for success for the long term and setting them on the right career path so we can keep them for the long term, be it an I or be it a T or be it a W in some cases.
Great. Thank you, Bob. And Linda mentioned challenging times, and our next question is going to be for Jason. Knowing that these have been very turbulent years the past few years, and I think even this summer it's been turbulent, notwithstanding the last couple days with the Red Sox. I'm curious, Jason, what is your organization doing to prepare leaders for these tough times?
It's a great question, and certainly I think our marketplace is changing dramatically. If we think about healthcare 5 years ago, 10 years ago, versus healthcare moving forward, it obviously is a very, very different environment for us. As we think about how do we prepare leaders, it really, I think, as our presenters talked about earlier this evening, it's about understanding the context and ensuring that our leaders, our managers, and frankly, all of our associates at Blue Cross really understand the broader context of the environment in which we're operating, understand our strategies, and really can coalesce and rally around that strategy as we move forward. You know, as I think about what does leadership mean, it really is about, and we heard this earlier, it's about being able to get a group of folks to really understand, commit to, and rally around a broader purpose. And as we think about how our leaders are going to be successful going forward, that'll be the key ingredient.
Great. Thank you, Jason. And Karen, what would you add to that?
I agree with everything that Jason just mentioned. I would add sort of two specific things that have changed recently that we're emphasizing with our leaders. We're training our leaders to be coaches, not only to be our top performers in advertising. There's typically been a real star system. And what we've been doing that's very, very productive is sort of training and teaching people to have more of a coaching orientation. And I just read an article in the current New Yorker by Atul Gawande, who of course is the surgeon at the Brigham and Women's here in town, who wrote the book, The Checklist. And he talked about feeling that his career, his surgery, he had sort of reached a plateau. And he got this idea. He was playing tennis in Nantucket and hired a 25-year-old tennis coach to play with him. And the coach gave him a little bit of direction on where to put his feet when he served, and it really improved his game. So he thought, well, I probably should have a coach for surgery, for my profession. He hired a surgeon who he had worked for years before out of retirement. And so studied sort of how vocalists, musicians, professional athletes all have coaches. And again, this is how we sort of create leverage within the organization. And then the other thing is, and this was mentioned earlier, sort of creating an environment of emotional safety for people to do their work. So our industry, which is creatively driven and idea driven, attracts a sort of a interesting type of talent that is a blend of sort of confidence bordering on arrogance sometimes, but also insecurity bordering on paranoia sometimes. So you've got I thought it was pretty unique to advertising, but it sounds like, that kind of resonated with people in the room. Maybe it's the economy, but you've got to be able to sort of have a very high performance, environment, but create some emotional safety for people who are really, putting their ideas out there, which can be very intimidating and very scary. So sort of within a high performance context, coaching people and then creating emotional safety is something that's a little bit newer to us.
Great. Thank you, Karen. So admittedly, tonight we're here to talk about Massachusetts, but in an ever-changing and more interconnected global world. Bob, I'd like to ask you how you and your organization think about globalization and the impact it has on your business and also on your talent.
Okay, good. But before I do that, can I put in a plug-in for Massachusetts? Massachusetts has been so good to us. I mean, it's given us such great talent. In 2008, we came into the year with under 250 employees. And this year, we'll go out with over 600 employees. We came into 2008 with under 100,000 customers. We'll go out with almost 500,000 customers. So that's because of the talent pool that's in Massachusetts. So now I'll talk about international, which is actually kind of interesting because just last week we opened our first international office in London. So what's tricky for us is to make sure that we keep the culture that matters, kind of the global culture that matters, while recognizing the local culture. So we really kind of look at it as what's loose and what's tight, and what's non-negotiable regardless of where we do business. And just give you an example, one of those things are the passion for the customer, the purpose-driven company. We're not going to give up on that. But what that might look like, how we might sell, how we might service, how we might lead and coach our customers might be very different from country to country. So for us, it's about what are we loose at and what are we tight at, and what do we really believe makes the difference between an okay company and a great company. And we know that that's about making great customers. And so if we don't lose sight of that,
we'll do that internationally and beyond, if there's a beyond.
Great, thanks, Bob. Linda, what would you add on to that from your perspective?
Well, it's the whole idea of how to go global is a very, very real issue for us in our company as we provide leadership development for our US-based customers. They all now have operations and divisions and subsidiaries all around the globe. And identifying the best way to support them is a very real issue for us. And I think it's a learning moment for us. And I think it's going to evolve over time. What we have found is that very often we're taking our US-based talent and sending them overseas to support those clients. But as our business grows in each of those regions, we're going to have to find ways to provide much more local context. So in a lot of cases, we're identifying partners that we can work with in some of these organizations to help support us. But getting that balance right to being able to protect your core values and maintain the quality and the legacy of what we do here and be able to provide that globally is really a very interesting challenge. I think it's a recent challenge for a lot of businesses. And one that's evolving and one that I'll say has a very different solution depending on what particular region we're working with. So very real issue for us, and I would imagine it is for an awful lot of people in this room.
Great, thank you, Linda. So we've talked about some of the current priorities. We've talked a little bit about globalization and the impact on talent. Let's take a look in the future. So if we look 3 to 5 years out, Karen, when you think about some of the things that your organization is going to have to do and perhaps be challenged by to attract, develop, retain, and engage talent, how are you thinking about those things?
Thank you. We're in our business. We always have to think 3 to 5 years out. We've always been thinking 3 to 5 years out. So I think the two things that come to mind. One is that we need to engage talent and sort of cultivate talent in different ways, current talent as well as prospective talent. And the other is that we need to be more welcoming to different types of talent. So in terms of engaging talent in different ways, of course, social media is the obvious approach. And not only from, the company sort of reaching out, but also leveraging our employees' social systems and social networks. A lot of our employees are very influential in social media. I also think it's a great way to find talent. I mean, our big issue is how do you find talent these days, since they sort of come from all kinds of unexpected places. And I can't think of, I don't know who I'm quoting because I can't remember where I read it, but I just read something where somebody said that smart people are smart offline and online, and dumb people are dumb offline and online. So it's, if you follow people and sort of read what they write online and, read their blogs and their tweets, I mean, you really have a good opportunity to get to know people, prospective talent, before you actually engage them in a conversation. And it's just young people don't email anymore. That's sort of, so it's a great way to engage, I think, in sort of a modern, progressive way. And then the other thing is sort of welcoming non-traditional talent, which we find talent not just in our industry anymore. We find talent that is currently in entertainment and music and architecture and fashion and design and sort of sports and all different places. And so we really have to figure out, once we find this talent and recruit them, we have to figure out how to create an environment where they can succeed. And we have a lot of different people with, sort of what we call the X factor, and you have all these molecules bouncing around. How do you create an environment where non-traditional talent can succeed? And I think that's what we can expect in the next 3 to 5 years.
Terrific. Thank you very much. And Jason, your thoughts?
I think that's exactly right. As we think about the next 3 to 5 years, it really is about that issue of inclusion and how do we have an environment in which folks with a variety of different backgrounds variety of different experiences really can contribute to what we're doing in the marketplace on a daily basis, how we're serving our members, how we're serving our accounts. So as we think about talent and the needs to bring in folks who have consumer packaged goods backgrounds, who have retail backgrounds, into what has been a very traditional healthcare environment in the past is critically important as we go forward. I think the key for us will be, it's a bit of a paradox of our strategies moving forward, I think will need to be more deliberate than they have been in the past, but also really flexible and nimble to allow us to recognize a changing environment, and that our talent needs in 3 years will be different from our talent needs in 5 years. And we need to make sure that our strategies are able to adapt to those changing needs.
Great. Thank you, Jason. And I'd like to thank our panelists. Now we'd like to invite our previous presenters up on the stage to be part of our question and answer session with the audience. So Raj and Russ, if you could just take a seat. I think we have enough seats on the end.
My favorite. Yeah, he's could have lived without the other two presenters.
And so this is where we make this more of a two-way conversation, and we'd like to invite you to ask questions. There are going to be some mics floating around the room. So if you could raise your hand, what we'll do is we'll get your question, we'll repeat it, and we'll see what our presenters have to say. So I think we have a question over here, sir.
Hi, how are you? I'm Louis Navia. I'm the founder of Urban Sophisticate. We're a magazine that focuses on collegiate talent. And one of the things is that a lot of people tell us when we go and apply for jobs or have the required, the degrees, but we don't have the experience. We don't have, the evidence to show you that we're worth. We do have versatility in the sense of our focus in studies and experiences in life. Now more than ever, you find collegiate students traveling the world. You find them starting up their own companies because companies are not allowing us to become part of those missions. So what do? We create our own companies. For instance, myself, I applied to Hearst to promote myself as a magazine, as a journalist. So I was turned down. So what did I do? I created my own magazine, creating and innovating. But how does a company differentiate between versatility and overqualified? Because a lot of the times, this is something that can come in detail through all the ranges in age, from college graduates to seasoned veterans. There's a lot of times that we sit with the human resources and they tell us, you know what, your resume is great, but we don't have the position available because we're looking for somebody less. How do you differentiate between versatility and overqualification?
Great. Thank you for the question. Which one of our panelists would like to take that question? Sure. Bob, thank you.
I think just this one.
First of all, congratulations on your business. much success. What I would say is that there's all kinds of ways you can package your background. And it's not always just about skills, it's also about experience. And what's the portfolio of experience that you can have that you can then package in ways that does make sense and translate into a business? If you've traveled, you've collaborated, you've taken risk, you've been flexible, you've been creative, you've been an entrepreneur in ways. So there's all sorts of examples just in your life that you can use to package in a way to tell a story about why you would be a possible fit for a job. You might need to compromise what that job might be because maybe you do need certain credentials or certain experiences that you can only get on the job. But if you're creative and clever about how you put your life together and tell the story, I'd say certainly from my standpoint, a lot of talent acquisition people would be very interested in that.
And I think Jason would like to add on to that.
Being responsible for one of those HR organizations that perhaps hasn't been as open-minded and welcoming. I look in the mirror, and I think we do, as leaders in our respective organizations, really do need to ask ourselves the question, well, why is that very traditional skill set or very traditional background important going forward? And in some cases it may be, in other cases, I think we have to open our own thinking a bit. And I've seen that actually within my own HR organization, as I've tried to bring talent into the organization, into HR, I've had pushback from some of my own colleagues saying, well, this person hasn't been in healthcare, or this person hasn't run this function within HR in the past, and we've had to just push through those objections.
Great, thank you. And our next question, I see a hand in the back of the room, and then we'll get this question next time.
Thank you. I'm Rich Ryan. A lot of the theme throughout many of the presentations was talking about companies that going from good to great from that standpoint. Bob mentioned about onboarding. When you do bring on new individuals inside your organizations, are there keys to having companies retain employees? Because you did not hear any company really, or anyone really talk about it, employee retention as a key component for their success and growth.
Great, Linda.
Yeah, I actually have a very specific point of view on that, and we talk about it a lot with our clients. Most people focus on engagement, right, and keeping your employees engaged in order to retain them, and that's really important. But I also think that people need to think about going beyond that, because to me, and I call that involvement. And I think when employees feel involved in their company, they're really going to then share in the responsibility for success of that organization. This gets back to what a couple of the speakers really brought forward tonight, which is building that trust and getting employees really involved in the decision-making and in the management and the running of the business, rather than this sort of command and control. I think involving your employees has the biggest impact on retention. And I speak about that not only in my current position, but in a number of roles that I've held in the past. I have found that when people are really involved in the work that we're doing and in the decisions we're making, they're much more invested in the work that they're doing, not only in their own work, but also in the work that the company is doing, and it really has a big, big impact on their retention with the firm. So involvement is the key.
Great, thank you, Linda. Other thoughts or comments from our panel?
Is this one working? The microphone. First of all, I'm like totally distracted reading all the tweets on the. But there was a tweet that Jason's lavalier, Jason's lapel mic, has a love-hate relationship with him. That was one of the tweets. Oh. Yeah. All right.
It's not just my microphone.
And now I completely forgot what I was going to say. So I would agree with Linda, and I think that we talk about return on investment with our clients and return on engagement, and one of the things we talk about both with our clients' brands but also with our employees is sort of taking that even deeper and talking about return on attachment. And so what you really want to do is get people attached. So there's involvement, there's engagement, and then there's real attachment. And I think you really you have to engage people and bring them in, but I think it's about you just have to treat people well, which frankly is not that hard to do. It's not expensive. When we moved here from the John Hancock Tower, we're in the building right next door, 53 State Street, people don't like change. So even people who sort of pride themselves on being creative and innovative and embracing change, people don't like their daily routines to be disrupted. So although we moved, I think it's about 1.5 miles away, there was a lot of anxiety around the move. So we just figured out what are the little things that we can do to make people's lives easier. So whether it was, we published a book that was, 53 lunches because the address is 53 State Street. So one of our employees took it upon themselves to go around the first 53 days and eat lunch at 53 different places and did reviews and started with a blog, and then we printed a book that we give our new employees. We opened a tiny little beauty room. It's 100 square feet because, frankly, we have a lot of women and there aren't as many personal services in the Back Bay. It's a little more male, in downtown than the Back Bay. It's a little more male-oriented. Little things that don't really cost anything that really make people's lives easier. So I think it's about just kind of treating people right and being good to them.
Great, thank you. I knew we had a question from before over here. we have a mic? Great, thanks.
Hi, I'm Julia Geisman with Millennium Learning. So first of all, I would like to say I'm so glad to hear that heart is coming back into organizations, which has been missing for quite some time. And the other thing is that there are really two issues that I'm not hearing anybody addressing, and I'd like to hear your comments. One is there's a lot of research indicating that the younger generation, the new generation in the workforce, is bringing a whole different perspective on leadership. And it's much more social responsibility oriented. And when you look up what social responsibility is, it's around people, planet, and profit. So it's really a systemic view of how do you maintain the profit, maintain your connection with the people as well as the planet. So there hasn't been much reference to how is this going to impact the organization. That's number one. Number two, a subject that's very near and dear to my heart is the gender disparity in leadership. And I'm actually deeply rooted in that topic right now. And one of the problems is organizationally. It's not particularly friendly to very professionally adept women at a certain point. And I wonder what organizations are going to do to accommodate and to retain the professional women who sometimes opt out for a multitude of reasons. You know, certainly balancing their career and their personal aspirations, their family aspirations. So, two questions. What are you going to do? You know, what's the comment on integrating the younger workforce, which is going to change leadership requirements, hopefully not, more towards the heart? And secondly, what are organizations going to do to accommodate the challenges of retaining professional women?
Great, and thank you for the question. So I think what we'll do is why don't we split those up? And who'd like to take the first question on the generational impact?
I'll take it.
You want to take it?
I'll take it. I feel like I'm hogging the...
So why don't we start with the generational question? Would anyone like to take that? Jason?
I'll take it.
Right. Great, thanks, Bob.
Kind of a short answer that I would say is get them involved. Don't manage them, have them manage themselves. Make sure that their managers know them and understand them and can relate to them. So it's about kind of, getting at their level, whatever that might be, and working with them, because at the end of the day, a manager is working for his or her employees. So let's make sure that there is that connection. So I would say it's less about what you do to them and more about what they can do for you. So I'd kind of turn it on its head and say, we need this young workforce. We care about this. We need some help on figuring out how to do it. And then we can do it.
Can I build on that for a minute? I think what we're going to do at the younger generation is definitely an issue for sure, but the broader issue too is that by 2015, we're going to actually have 5 generations. For the first time in history, we'll have 5 generations in the workforce. So understanding how to lead and manage across all 5 generations, I think, is the bigger, broader issue, when each of them have different goals and objectives for different periods in their life. And I think that that's a challenge that we're all trying to figure out, and it really goes back to getting them involved in helping to identify what things are important to them, so that you can meet each of their goals. I don't think there's one simple answer. I think you really have to have various styles and various things to address the concerns and issues that are associated with each of those generations.
Great. Thank you, Linda. I think Karen wants to take a crack at the gender question with regard to leadership, or both, maybe.
Well, both. I actually think they're related. I think, to Linda's point, I think the way you sort of engage all 5 generations in the workforce, and particularly younger, is your first point about what I call the golden triangle, right? So if you're focused on, your customers, your employees, and your community, and the heart part of it, the mission-driven part of it, I think that it gives somebody across, I think that sort of transcends every generation. So I think people will be, some people will be more focused on one point of the triangle than the other, but that, sort of, and I think that was a big part of Raj's discussion about sort of, purpose-driven, mission-driven, just to give people a little more to hang on to. I think particularly younger people today, you got to make a good living, but it's not so much about the money and climbing the corporate ladder, sort of the, traditional way that, frankly, I looked at it when I was younger. There's so much more to think about, and I think that's related to your women question, and I think that it's a big passion of mine that the percent of women on corporate boards, which is pegged to the percent of women in senior management at public companies, is just stuck at this 14% or whatever it is level, and it just and one very much influences the other. But I think to your question earlier, I think that women, there are a tremendous number of women entrepreneurs. So I do think that if women, I don't think it's an excuse for corporate America to not accommodate women and other diverse populations, but I do think, there's more than one way to succeed. And I think women have found more success as entrepreneurs than they have sort of, in the corporate boardrooms and in the corner offices. So I kind of think they're related, though. I think that's, I think broadening the definition of success and what makes a company successful beyond just a financial return actually is what appeals to all those populations, be it sort of gender, age, all diverse populations.
You, Raj?
So I also agree that the questions are related. When we talk about conscious capitalism, we really talk about 7 levels of consciousness. And what we need is full spectrum leadership addressing all of those. So all of us have needs at different levels. So whether it's a base need to just pay the bills, and ultimately the highest around service, but before that it's about meaning and purpose, and before that around relationships and teamwork. So we need to reflect all of those. So a high functioning organization today reflects all of the levels of consciousness, which will then appeal across generations. Ultimately, it appeals to the humanness inside all of us. The second thing, we say that there's a big trend out there, we refer to it as the feminization of the culture, that after millennia of society being dominated by one set of perspectives and values, sort of the masculine approach to leading organizations, governments, everything else, sort of on a military model, we are finally moving more towards a balanced approach, and in many sectors of society, really, we're moving towards the embracing of nurturing, caring, compassion, relationships, those values now becoming much more central. And McKinsey did a big study of leadership, and they found that the tenets of successful leadership today are the ones that come naturally to women. And men sort of have to learn how to do those. So what was called a study on great leadership became How Remarkable Women Lead. It's a book by Joanna Marsh at McKinsey. So what we find is that society is going to be dominated in most of the professions. If you look, 70-80% of the women of the enrollees in college, in law school, and medical school, etc., are women. Business schools are lagging behind because businesses, large corporations, have been seen as hostile to families and to women. And therefore, women are starting 70% of the businesses in this country. So that's great news. But by the same token, big companies are losing out on some of the best talent that's out there. So they will have to adapt. And the ones that adapt the fastest, if I look at some of the companies that we work with, the Container Store, there's only one man in the top 20 executives of that company, Kip Tindall, and all the others are women. So and even the men who are leading these companies are actually leading from a place of love and caring and compassion and nurturing, etc. So those values are now becoming very much at the forefront. So I think the next decade or two, I think we will see a dramatic shift. Those numbers are going to really change quite a bit. And it's great news.
I think there's a lot to be encouraged about for women and for all different people over the next few years. Is the very real fact we have a bit of a timing issue here because of the economy today. The companies have the power really to decide who's going to be in what spots, because there is a lot more supply of people wanting jobs than there are jobs for those people. But the very real data point is that there are 77 million baby boomers that will be retiring over the next 5 to 10 years. There's only 40 million people in the generation behind them. So there will be huge leadership gaps in companies as they begin to exit the workforce. And when you have that kind of a gap, the power is going to shift back to the employees. And so some of those people who have been unable to get some of their work-life balance issues met, for example, will have a lot more power to do that when there is a tremendous demand for talent. So the best people out there will be able to get involved in defining their terms of engagement with their employers. So I think that's a few years away, but I think that's going to open up a lot of opportunities for women and for everyone.
Russ?
So one of the things that really was striking when we looked at higher ambition companies was the proactive focus on diversity, and not coming from a place that said, this is transformative. And so if you talk about young people and you talk about women and you talk about a much broader set of skill sets in the workforce, there's an opportunity not just for those people, but to create a positive tension in these organizations in a way that's transformative. And so I think I want to go back to a comment that you made before, which is it's not just a question from the perspective of talent, it's a question from the perspective of an organization that says this is an organization and an opportunity. You're going to challenge us and we're going to challenge you, I think, and a level of focus on performance that says it's not going to be easy necessarily, that we're looking for the 1 in 10, as you said, that 10x. But I think that is universal. And I think, the challenge around young people or around women or anything else is, in fact, organizations get set in their ways. And so the question is, how do you create that continual revolution from below, if you will, for people who are coming in from very different places? So I think it's an opportunity not just for talent, but I think it's an opportunity for all of us.
Great, thank you. We're going to have time for one more question. So if I scan the room, I'm looking for a hand. And I see one, the first one I saw was right over there. My apologies.
Hello, I'm Mike Lake. I run the World Class Cities Partnership at Northeastern University. And the Boston region has about 350,000 students within its population. That, to me, is a talent group that we don't engage while they are students. So we turn and ask the question about the brain drain when they're about to leave Massachusetts. So my question to you is, what new, innovative, creative ideas do you have for the businesses in Massachusetts to start engaging students while they're in school so that they can start building their professional networks and that root system they need to have an opportunity to find a job in Massachusetts rather than leaving to go somewhere else in the US or around the world?
Great, thank you for the question. Would someone like to respond?
I have a quick answer, which is sort of obvious, which is internships. We have usually over 100 internships throughout the year, our big programs in the summer. We hire probably a third of those internships are reserved for diversity students, and we hire probably a dozen to 15 permanently of those kids. So they come in when they're rising seniors, and then they come back when they graduate. They're not all from Massachusetts. We have an issue. We clearly want to support Massachusetts and all the college students that are concentrated here, but we also want geographic diversity. They're not all from Massachusetts, but there are quite a few of them. And we find, and I always tell them, if you enjoy your internship, great. If you don't, that's okay too, because you've ruled something out, which is sort of helpful, But we hire an awful lot of interns, and they work out, I think, it used to be a disadvantage or a liability to be young in our business. Now I have a love.
I'm glad it's not me.
Now I have a love-hate relationship with my. But today it's really an asset, at least in my business, to be young, and so you know, my generation, we call them ourselves, you know, immigrants, digital immigrants, but these kids are digital natives. And that is, you know, it's 50% of the work that we do now. It'll be 80% of the work. It'll be 100% of the work in a few years. So we look to students to help us do the work that we do for our clients.
Great. Thank you, Karen. We're gonna go to the wrap, I think.
Alrighty.
That's okay.
Yeah, fine with me.
So, as we wrap up, the first thing I'd like to do is thank our presenters and panelists. I'd also like to acknowledge and thank you, our audience, for your great questions. So thank you. So we've heard from a few different perspectives. We've heard from the research perspective in our earlier presentations. We've also heard from Boston business leaders, their perspectives and the things that they're doing to cultivate talent. And we've heard your perspective. We've heard what's on your minds, what you're thinking about, and what your questions are. And so I'm going to leave you with a couple of thoughts. In my role, I get to spend a lot of time thinking about how do we really help our talent reach its potential? And how do we help the talent of our teams and our business reach their potential? So as I think about the questions that were asked tonight and I think about the ground that we covered, it's really three things. So as leaders, what can we do to create the opportunities for people to retain, attract, develop, and engage our talent in our organizations? As employees, what responsibility are we taking to really declare what we want to do with our careers and what things we want to engage in within our organizations? And then lastly, as the Commonwealth of Massachusetts, as we think about the private, the for-profit, and the nonprofit sectors, what are we all doing together to really come together in forums like this to figure out how do we better cultivate our talent? So with that, I thank you for your questions, and thank you very much.
So thank you to our moderator and our panelists. A great conversation tonight. My personal favorite quote, which was retweeted many times, was, "We have the opportunity to live the most meaningful lives of all time." Really, just very, very thoughtful, and I know a lot of people are thinking about that, and a great conversation about cultivating talent. To Mike Lake over there from Northeastern, without Northeastern co-ops, you probably wouldn't get your Globe every day. So in fact, this event probably wouldn't have happened tonight because half the people from the Boston Globe staff are Northeastern co-ops. So thank you. Thank you very much for a great program that's produced a lot of success stories at the Boston Globe and Boston.com. Before we get to the cheese cubes and cocktails, I wanted to just remind you to visit the website, boston.com/better, to continue the conversation. We did live stream for the first time tonight's event, and we hope you continue the conversation through Twitter and also participating in some of the questions and content that we're going to have. I also need, my final comment is I want to give a plug for our annual Top Places to Work issue, which is coming out this November, published by the Boston Globe. This is going to be our third year doing it, and you will get to see the top 100 companies in Massachusetts as ranked by their employees. So a lot of good lessons to learn from those companies about how they engage and really maximize the talent that we have here in Massachusetts. So thank you again all for coming, and we're going to proceed, I think, this way to a little networking session. So thank you.